Hope everyone's doing good. Welcome back to lesson 14. So today's lesson is going to be building on top of what I spoke to you guys about last lesson, getting into, not too much detail, but we're going to be looking at some of the concepts I was speaking about, right? And with this, I guess, theory side of stuff, this more, kind of that background knowledge, we'll take it slow because I really want everyone to understand. Developing this understanding of the algorithm of price, how markets work, it didn't happen quick for anyone, right? And I'm speaking from experience, and I study a lot. I put a lot of time in, and of course, I know some people learn, very fast. But even then, I can tell you these things, especially some of the stuff I will teach today. But to then go and use them, and even identify them on the charts is kind of like a different ball game, and you really have to digest the information to actually be able to use it effectively. So let's get into it. This is quite a basic thing, right? And it might sound complex, but if you're up to date with all the lessons and you're watching this, then I think it should be fairly easy to pick up. So today we're going to be talking about the market and liquidity. So the algorithm. I remember when I first started learning about, algo, how the algorithm functions. And my question was, every single chart I'm looking at, is the algorithm present? I'm looking at some, like a shitcoin chart, and I'm like, is the algorithm there? And I'm sure some of you probably had that question if that last lesson was your first introduction to it. The truth is, it's not essentially on every chart in the way that we think it is, right? When something has a futures contract is when it's definitely part of, let's for now call it the algorithmic system, right? It's in tune with other pairs or indexes or other markets that are controlled or rather delivered by an algorithm. What's a good example of this? When I was learning this, the example given to me, go look at Bitcoin, right? Go look at the Bitcoin chart. Go research when a futures contract was introduced for Bitcoin. Watch the price action from before then versus after. One of the main changes you'll see, the price action isn't as, I guess like gappy. Like you don't have those gaps and push up gap like everywhere. It's very, straightforward. It's just normal price action. It's being delivered smooth by an algorithm. Price returns to rebalance areas, respects order blocks, arrays, so forth. When the futures contract is introduced for something, the trading becomes algorithmic. What is the algorithm really doing? It's very basic, right? What is a market for? Just, what do we actually do in markets? Think about supermarkets, anything. You buy things, right? Maybe if it's like an outside market, you might even be selling things. But essentially, we're trading, right? When people think trading, we think of forex markets, crypto futures. But in reality, every time you're transacting, you're trading something, right? Even working is a type of transaction. So having that basic knowledge, right, at the core of everything you do, and especially for the next thing I'm about to show you guys, you have to remember the algorithm facilitates trade, right? It allows trade to happen. And that's one of the most basic functions of it, right? When we say, the algo seeks liquidity, rebalances, yeah, it does. But it does these things to allow trade, right? What do I mean by that? Why do we rebalance? Think about that for a second. When I taught you guys imbalances, when I touched on them in previous lessons, I say, here's an imbalance. There was only buying in this candle. There was no selling. So what is the market doing when we're returning there? It's offering that price to sellers, right? So what's the algorithm doing? Offering fair opportunities to buyers and sellers. That's what rebalancing is, right? And when we take liquidity, or rather when we seek liquidity, what are we doing? We're delivering liquidity, right? Let's get into the next part. So I touched on this in my last lesson very briefly. Offset accumulation and offset distribution. I know, big words, but I don't want it to, confuse you guys. It's very, very basic in reality as a concept. But these are you can say the official terms for it. as I've said here, to make your lives easier, offset accumulation, when we sweep a low and move higher. So it's a bullish move, right? Offset distribution, when we sweep a high and move lower, a bearish move. So over here, I've got the definition for offset, right? Counteract something by having an equal and opposite force or effect. So let's think about it. Let's kind of rewind to the last lesson. What did I tell you guys? When we sweep liquidity, right? When we sweep old highs and lows, what did I say we do, right? It comes back to that basic concept. To buy something, you need someone to be selling it, right? And to sell something, you need a buyer. When we sweep, right, sometimes we can say, not sometimes, you can just say generally, this move was funded by that sweep, right? Just think about it logically. It's not meant to be complex, right? What do we do when we sweep an old high or low? We trigger in stops, right? We trigger, buy stops or sell stops. When we trigger these stops, what does that allow smart money to do? Remember what I said smart money do? They buy in after, essentially a sweep of liquidity or sell, whatever. They're pairing their orders with that sweep, right? Let's say smart money are buying. They can only buy if they're sellers, right? To pair their orders. Orders always have to be paired, right? You can't just sell, if someone's not buying. It's very basic stuff. But all these things I'm saying, I know they will make a lot of sense to you. And of course, it is genuinely basic knowledge, right? Like some of the stuff I'm saying is just common sense. But to see how that functions on the chart is the tricky part, essentially. And understanding, this is what this sweep done. This is what that sweep done. That sweep allowed for this move to happen and X, Y, Z. So now, with these sweeps, right? Am I just, kind of teaching you for the sake of it? No. These sweeps are going to help a lot of you now, intraday. This is important. I'm going to show you the time, let's say, their relevance, or time's relevance rather, to these sweeps. When we trade in kill zones, right, it's something I don't think I have told you guys before, or even me. I don't trade until a sweep has taken place. Even just generally, like in a day, I will not trade unless a sweep has taken place. Now, right, for a second, I want you guys to ignore offset accumulation distribution. We'll come back to that, right? What do I mean by a sweep? If a day is a bearish day, right, and my bias is bearish, where do I want my London to go? I want my London Judah swing to be bullish, right? Just try and visualize this when I say it. You want your London Judah swing to go up. When it goes up, what do you expect? There's two main things I'd say we can expect, right? Or we anticipate. A sweep of the Asian range high, so Asian buy-side liquidity, and potentially a run on previous daily high or previous weekly high. That is what we anticipate. Once we have those runs, once we've run that high, we then wait for a market structure shift. Because what's above those highs? What did I just say smart money do? Or what we trying to do? Get in line with smart money, right? So even my trading, that is the most basic model that I like to trade. London Judah swing. Wait for a run on, Asia buy-side liquidity. I'd like a run on, previous daily high as well. Some sort of liquidity. Run some sort of old high. Wait for that market structure shift and then short. That is what I'm waiting for. That is an example, of offset distribution if we're selling. Because what did price do? When we're running those highs, we're triggering in buy stops, which means what? Smart money are selling. And again, we're trying to get in line with smart money, right? So we expect those sweeps and then we get in trades. So now, right, some of you guys listening, especially I know the guys that are up to date and you're probably watching this lesson right now, you trade, right? And you wait. So let's say a market structure shift happens, right? Do you guys just take trades when a high hasn't been swept or a low hasn't been swept? You don't, right? Some of you guys have probably done this for months, or for a prolonged period of time. You probably don't even know why you're doing it. This is why. This is why we wait for that sweep. Another term you guys have probably heard of: strong highs and strong lows. You know what? I'll get into that in a different lesson because it may confuse some of you and how they work with ranges. But that is why we wait for those sweeps. Even on market structure shift, we want to see runs on liquidity and then a reversal in direction. Because what's happening? That reversal we can say has been funded by that sweep. That sweep is allowing for us to reverse and now deliver to sell side. We delivered to buy side, we took highs, and now we're going to go ahead and deliver to sell side. Right? We're going to deliver to the sellers. So cool. Let's hop on the charts and look at some examples. So this is an example for today. I want you guys to just pay attention to New York here, right? Let's for a second assume that we had a bullish bias. Let's come out first, right? Let's properly break it down. Of course, we are bearish on the euro. I know this move today probably threw some people off, right? But we have a run on the previous daily high to start our day. Let's zoom out. This is down here where Asia ends. So if you're looking at this and you're a bit confused, like what's going on with these boxes, right? I've changed the timings of these boxes. So before I get into it, this is 8 to 12. This is ICT's Asian range, right? So 12, I automatically know where my New York midnight price is at the end of this box. This is London kill zone, this is New York kill zone, right? Just made it easier for myself because you don't need your boxes to cover the whole session because we're not really trading the whole session, are we? So cool. We have a run on yesterday's low, right? Make that run low. In London, we also have this run. You guys can see this sweep allowed for this move up here, right? This sweep here allowed for this move. This move then done what? Retraced and moved higher, right? So we can say this sweep over here, this sweep was sell side liquidity, this sweep on previous daily low and Asia low. Essentially, this is offset accumulation, that sweep. Now, some of you probably looked at this if you were trading EU today. I wasn't. Probably look at the equal lows and were like, you know what, nah, you're not gonna trade that. Fair enough. It's not high probability, but as you can see, essentially from here to this high, we retraced, come deep discount. Offered another buying opportunity, price, retraces again after breaking this high with this giant wick today that I didn't expect, right? So it wasn't easy to trade or anything. This is all in hindsight. Just want to make it clear, I wasn't trading, but we're just mapping what price done. And again, price comes OTE and we have that move higher. Let's look on a lower time frame, right? Now, see, this is what I meant. This may catch some people off guard. Cool. So now let's imagine, you've come New York kill zone. You're like, oh yeah, price is whatever. Like you're fairly certain it's bullish now, and you're like, okay, yeah, I'm trying to buy it up, right? And let's say you're on a lower time frame, from this low to this high, you can say, oh, I'm trying to catch an OTE, go up, whatever, right? And we have these. We have these lows in between our range, right? Now, this is the thing. This will confuse a lot of people, right? They'll think, oh, this low here, right? I'm going to mark it out. We sweep this low. Market structure shift. And now, this is from experience, by the way. This has got me popped so many times when I was first starting out. And now what happens, right? We take that low and what happens? We come OTE, right? From this swing to this low, we come OTE. So now you're confident. You're like, oh yeah, we're going to, head low or whatever. Easy to change your bias. And you see, if you try to take a short there, would have got destroyed. What did this actually do here, right? I want you guys to pay attention. Pay attention to the middle of your kill zones. We'll get into why later, but pay attention to the middle of your kill zones. The middle of this kill zone is 830. Right. There's a relevance here. 830, this low is made. We then come and sweep this low and move higher. Yeah? Just bear that in mind. Offset accumulation. Confused myself there. Yeah, offset accumulation. That's right. So we come down. There's quite a few confluences here. This was a really, nice trade looking in hindsight. Probably wouldn't have been as obvious actually intraday. So let's see, where did this wick actually come? So what did price do? Right at the start of this session, I spoke about rebalancing. We come and filled more of this fair value gap. Even though we filled part here, right? This wick filled this much. Bear in mind, this is still imbalanced area here. So price came and filled more of it. We tap in to the high of the mitigation block. This is a mitigation block. We can say this is an order block. These two candles put together. So then we tapped into those and we swept that low. That sweep is the most important part. You will see this very often. Middle of your kill zone, your 5 minute, 15 minute, whatever. If you have this, right, what have I taught you guys? This is eye of Fed, right? Sweeping a low into an imbalance and flying off. Go back test this. See how many times it happens. Do not get caught offside by this. Instead, use it. You can use this as, a model. Use it as an entry. You can wait for this to happen. Around the middle of your kill zones, you'll see this happen. You're going to see these sweeps, right? What do these sweeps do? They fund the move. Now, what was I speaking about? That sweep of London. This, in a way, right? We can say this is a small sweep, right? Lower time frame. It's just a low here. We take it. It funds the move up. Cool. This London Judas, the way I like to see it, is offering offset accumulation, right? Because it was a bullish day for the move of the day. We're taking this liquidity down here, this external liquidity, this Asia sell side, the previous daily low to fund the move of the day. These concepts are fractal. They're happening on every time frame, right? When you guys think of another thing now, a lot of you guys trade using something called inducement, right? I feel like inducement's very hyped up. Just one second. I feel like inducement's very hyped up. Not that it's a bad thing, but that's essentially all this is. Inducement is just a sweep on a high or a low. And typically, we'll see it go into an array. And, people will make a trade based off that. Let's see if we can go to this one on a lower time frame, see a nice up. Cool, yeah. Someone may have seen, this low land up here and thought, oh yeah. So I hope you guys, I know because there's a lot of candles, it's not as clear, right? But let's imagine you're watching the charts, price made a range from here to there. And then we left this low behind, right? And we have this imbalance, we have this order block, mitigation block. A lot of you would consider this a very good POI, an entry point of interest. Why? Because, people consider this the inducement. We can sweep this low, go into this order block. So that is pretty much what it is. A lot of you guys are already using this, especially, when you come to this video, I'd assume a lot of you already are because you're learning off each other as well, which is very, very good. But it's important to know what price is doing, right? All nice, in reality, the most important thing is being able to trade it. But it's important to know what it is doing and when we expect it to do certain things. So pay attention to the middle of that kill zone. So that's not a very big lesson, I'd say, today. I know some of the phrases or even visualizing and understanding the concept, what's actually happening behind the scenes, maybe a little bit, difficult to grasp, and that's understandable. Sometimes you have to watch some of these videos a couple times, but hope all of that made sense to you guys. If there's anything, that didn't make sense, of course, just message me as usual. Everything's here. and I'll be back soon next week, probably with another video, and we'll be getting deeper into market make sell models and buy models, or just market maker models, and what market making actually is, who are market makers, and very interesting stuff you guys will see. So I'll see you soon in the next lesson.